Wait 1 minute, Kim.
What?
Start it over. I'm gonna tell you when it says the meeting setup is ready.
Okay.
Let me put my earplugs in because I'm having a real hard time hearing you all.
That's what you're gonna have to do, Tana. That's what I had.
No.
Come on, lady.
Do you see it?
You're gonna tell me when, right, Lisa?
So we are like, go ahead now, Kim. We're live now.
Is it on?
The commercial, the intro is not on.
Open up.
Welcome. If this is your first time joining us, thank you for tuning in. If you have seen the show before, thank you for joining us again for this special COVID-19 episode of Red Door Conversations podcast. My name is Kimberly Dixon Dudley, and I'm 1/4 of the Red Door Conversations podcast crew. We are so excited to virtually reconnect with you all, even in the midst of a pandemic. Hey, you guys. A special thanks, you guys, to our public servants, to our medical professionals, our grocery workers, our truck drivers, everyone out there. We are praying that you are safe, that you're practicing social distancing as much as possible, and that you stay strong and healthy during this crisis. We appreciate you. But today's show is 25 minutes, y'all, of facts, dispelling myths regarding your finances during COVID-19. You're going to want to grab a pen for this and some paper. But let me introduce my co-host. You may already be familiar with them. Miss Tana Young out in the Woodlands. Hey, Tana.
Hey, girl. So happy to see you guys again.
Good to see you. And Miss Lisa B. White joining us all the way from Pearland, Texas.
Yay!
Hey, Lisa. Hey, Marla. How's the weather in Clear Lake?
Oh, it's beautiful and sunshiny.
Also joining us today, you guys, we have financial experts Shroy Taylor and Carl Brown. Shroy is the director of sales with Credit Plus Credit Union. Carl Brown is the vice president of Regions Bank. He's not on yet, but we expect him to join shortly. But both men have over 20 years of banking experience. So they're going to help us clear up some of the facts versus some of the fiction out there, okay? Also, another special thanks to everyone who's joining us during their work lunch hour. So we're going to take questions from Facebook at the end of the show. So get your pen, get your paper, get ready. Also, grab your beverage of choice. Cheers.
Laptop.
Yes, cheers.
So before we get into the main topics, I think we have a few red hot topics.
Dude.
Hey, Marla, what is going on? These states are opening up right now, or what's the...
Oh my gosh. And you know, I just don't know. I'm so conflicted because, you know, of course I need my son quite bad. But guys, it's not worth my life. You understand where I'm coming from? I mean, it's like safety. The safety concern is still there in the back of my mind. And, you know, I just want people to, I don't know that people really ever take it as serious as it needs to be taken. We know that in Harris County, Judge Lena Hidalgo just made it you have to, we're going to be required to wear a mask for the next 30 days.
Right.
So I saw on social media where she was getting a lot of backlash. But people don't understand, this is to protect you, honey. This is not meant to cause you any harm or discomfort or, whatever it is that people are thinking. It's really to protect us as a community. I think that people don't understand that. What do you guys think about it?
So, I don't think I properly introduced Sharoy, but Sharoy, you've been working since the crisis started. The bank, your credit union hasn't closed, correct? Or has it closed?
Right. No, we haven't closed. We closed the front door, but we still allow our customers in on kind of a needs basis, where we are still having our employees to wear masks and things of that nature, because we do have some of them on the front line and we're trying to protect them as well. But some of our members or customers, they still not trying to distance themselves. And some of the people are acting like this is normal. People are just carrying on, opening, checking accounts, being in offices with people, things that could wait, but they still trying to do it. So we have to tell them that we're trying to follow the Harris County rules of 6 feet distance, and people get upset.
Wow.
So I think today, the city of Houston just opened for some retail spaces, and they're doing, you can't go into the stores and shop, but you can go and order, or you can get your, I don't know if it's Marshall, some of these places you can go and call and have them bring out your goods to the car. I mean, I love shopping. I mean, no, I don't. I love new things. It's a good, healthy habit when it doesn't harm me. There's nothing that I need from TJ Maxx or Ross right now that just can't wait. So some things, like to your point, Marla, I think we have to kind of weigh the life or death consequences. And a lot of people aren't thinking about that because they feel like they haven't been directly impacted. But we've really only tested 1% of the US population. So we don't know who is out here carrying it, they're asymptomatic. So I think it's prudent for us to take our time and open slowly so that we can gauge it. We don't have a vaccine. There's no way to really treat it. Your body's just got to fight it off. So I don't know if that's a smart way to approach, life or death situations. But yeah, it's kind of scary. But I understand people want to get back to work and try to get some sense of normalcy in their life. But I think we have to think about what's, if it's worth burying your grandmother for it, to me, that's my opinion on that. But the other issue is that this is really disproportionately affecting people across races and culture differently. I don't have the data for that. Lisa, do you? Do you have like statistics regarding how it's the virus is affecting, people from different races? I think, did you mention that earlier?
I did, Kim. Let me ask you this question. Are you guys hearing a bad echo?
No.
No, you're not. Okay, excellent. I just want to make sure that there's no echo. Because I am hearing an echo on my end. I don't have those numbers specifically, but I do know that African Americans at a
Alarming rate.
very high rate, we're being affected by the virus a lot more than the other ethnicities. And I can only attribute that to pre-existing illnesses that we have, our inability to have access to better health care, the neighborhoods that we live in, we're in socioeconomic underprivileged neighborhoods. And so the better healthcare systems are not located in those neighborhoods. I also know and understand that if you do have a pre-existing illness, if you are older, you're not given a ventilator. It's a grading system that's been put in place, or a scoring system, so to speak, that's been put in place. And if you, let's just say I have epilepsy. So if I was to go in, then my scoring system would be less, my score would be less than, let's say, someone like Tana, who is healthy. She would get the ventilator before I would.
Said no, I'm not.
I have asthma.
Oh,
I have asthma, remember?
yeah.
I'm asthmatic and just got off medication.
Okay,
You
well,
know,
so no, you wouldn't get the ventilator either, Tana.
Well,
We both
okay, so is it saying that the people who are higher risk and they would be more difficult to save, these people would not have access to a ventilator?
No.
With that being said, guys, I have to bring up something that you may not want to talk about, but it is something that President Trump said. And that is because it's so serious. I thought it was a joke. I don't know what he was thinking, but when we're talking about healthcare and people taking care of themselves, you know, to protect themselves in regards to this serious virus, I don't want anyone trying to inject themselves with anything. I mean, Lysol has come out to say that, you know, please don't do that. And I'm asking the public. I mean, you would think that you would not have to say that, but that's something very serious, guys. This is a serious situation. And so we want to make sure that nobody comes up with that great idea to do something like that. But that's my 2 cents on that one.
So I have a comment about that as well. So here's the deal. We would hope that common sense would prevail, and I'm not being judgmental at all. But on the bottle it says, "Do not ingest this alcohol, Clorox, bleach."
Right. There's a first aid at the bottom of the screen. I mean, the back of the can,
right,
or you got.
But the problem with that is when someone from a high figure or high position of authority suggests something otherwise, it may give people reason to pause and think, well,
right.
Should I? Could it? I mean, it may work. And if you're at the point where maybe you are feeling like I can't get a test or a ventilator, or I can't get, any care, and I may be suffering with this, maybe somebody might think about that. So again, Marla, yes, 100% do not. I mean, it should go without saying, do not do that. But my other concern is that the White House, and I don't want to politicize this at all, but I think there are some levels of accountability that we have to acknowledge. So the White House press secretary came out and made a statement. She said, the media is really taking his words out of context. No. There's an actual video of the recommendation that if this might be possible, that people consider that. So absolutely under no circumstances should anybody consider ingesting Clorox bleach. Let's just say that.
Don't do it.
And I'm done. I'm done.
Read the warning on the back of the can, guys, on the back of the bottle. Read the warning, okay?
But you know what? On a positive note, I just read that he did sign the next wave of stimulus funding for small businesses. So that is excellent.
Awesome.
Kudos. Seriously, it is much needed.
320 billion, I think.
Was it 320 billion?
Yeah, I think
Yeah.
320 billion for a paycheck protection program.
Yeah.
Sure. Are y'all lending any money as a credit union or small institution?
Yes, we are. We are lending right now, but we don't handle any business accounts at all. But Carl, that's why I wanted him on the phone.
My
At
personal
Beacon.
page.
They're
not
doing
Red
a lot
Door.
of lending right now with that personal payment protection business loan. So they're really putting out a lot of money. That's why I wanted him on here. But we're doing our unsecured lending has ticked up, and then we're doing several things for our 19,000 members just to try to help them during this time. So we're Go ahead.
Are y'all doing additional like credit cards? I think what I've heard. We're gonna jump into this later on, but
Yes, I'm writing my questions down for him right now. Because I've got to.
so before we get too far into the topics of the show, the red hot topics were definitely red hot and very relevant, but I want to transition us into something that we all know about as real estate professionals and what's happening in the Houston real estate market, because There's so many, I'm on Instagram and Facebook and I see people saying, you know, so many things. And I'm like, oh no, that is not true. So we're going to do what we said we're going to do, dispel some myths and provide some real factual data. But Marla, like, what are we seeing in terms of forecasting for real estate in the Houston market?
You know what, Kim? I'm gonna start off just with some statistics. I was on a call, and this was Monday of this week. And I just want to start off with some things, but I have some very important information that I want to share with not just real estate professionals, but with the consumer. Because as you said, there's so much that's being said out there. 2020 started off as a record-breaking real estate year. That's the first thing I want people to know. And, you know, COVID did change it up a little bit, as we would expect. For instance, the closed listings indicate that we were up by 8% in March compared to 2019, right? But then over the last weeks, closings are down.
Hey, Marla.
Yeah.
Marla, you're fading out a little bit.
Am I? You guys can't hear?
You're in and out.
Okay, I'm not. Let's see. Is it any better? No? Good? Okay. So, over the last 3 weeks, closings have been down. Closed properties are down 4% compared to the same 3 weeks in 2019. Pending listings are down 37% compared to the same 3 past weeks in 2019. But guys, people have to remember, when the coronavirus, once we were issued the stay-at-home order, some sellers were, you know, concerned about people coming into their homes and things like that. So that's to be expected. The pending listings being down, that's to be expected. Buyers that were looking, some of them were concerned. They didn't necessarily want to go to an occupied property, and occupied sellers didn't necessarily want them coming. So that makes sense. The data makes sense. New listings, they're down by 28%. But however, listen, that's not that bad, guys. 28%, because in Italy, in the UK, right now, they're down by 50%. Okay, off market withdrawals, properties that have been terminated, properties that have been expired, it did increase again once the stay-at-home order was issued, but now it's leveling off. People are getting those homes that they pulled off the market back onto the market. The showing time that many of us use to schedule appointments, showing time has said that the showings on properties are down by 49%. However, HAR has reported that they have more traffic on their website than ever before. So the people are still interested in real estate. We're just doing it a different way. So, you know, there are virtual platforms that we're using, just like we're using Zoom right now to, you know, carry on with our show. We're doing business just a little bit differently. One of the myths that I definitely want to address, a broker friend of mine had someone to tell her that they wanted to back out. Did not want to buy a property because they believed that if they wait 2 to 3 months, that they could buy the property for maybe $50,000 to $75,000 less. That is not the case. That is not what statistics show. And also, you have to remember, if sellers are saying, you know what, I think we'll hold tight and stay where we are a little bit longer, there's less on the market for a buyer to choose from. Guess what that means? That means that prices are not going down, honey. That's not the way that you you know, get into a buyer's market. That's one of the main myths that I'd like to dispel. The other myth is that if I put my house on the market, no one is looking. That's not true. people are looking, they're just doing it a different way. I just had a listing that I put on maybe 2 or 3 weeks ago. We had 19 showings, 19. And
Wow.
we got a lot of, we got a lot of, I got a lot of emails from agents that had questions that didn't necessarily go out to show it, but they had some questions about the property. So people are home, people are looking, and people are still very interested in real estate. So go ahead, Kim.
No, it's funny because I love I love that the momentum and the energy and the fact that you're sharing what's really happening in the market rather than this pie in the sky is falling type of feedback and energy that I'm seeing. But I did have an agent contact me. She said her clients wanted to see it. She texted me and she said, but she actually had the virus. She had COVID-19. And she said, "What would you mind showing?" So I think in this climate, of course I want to sell the home. You have a buyer who's interested. And if you can't show because you have a fatal virus, I'm happy to do that. So I hope that type of, camaraderie or, give and take, just kind of continues as we move through this. So yeah, even in the virus, I mean, she's showing properties through other agents. Even. So what you said earlier is it's not that it's changed, it's just that we're figuring out different ways to do what we do. People are not going to live it.
I also want to add that, remember, for those that do have their homes on the market, they're still able to have open houses. Again, we're just doing things differently. So we're doing the virtual open houses. And that itself, in my opinion, is very successful. So, just something for agents to remember.
Absolutely.
So the next topic that we were going to cover and dispel with some of the myths and facts we were going to cover here were regarding what is a forbearance and what is a deferment, because so many people are like, I'm going to go get this. I'm going to get this forbearance or there are no consequences to it, So Lisa, what have you found out in terms of what's the different definitions of these things? Because people need to know what they mean and what the consequences are.
Thank you so much, Kim. Yes, we've been hearing a lot about what are deferments and what are forbearances. And so I am here today to give you the facts because there's so much out there, and it's a tad bit frustrating when you hear, what people come to you and tell you these things are. So I've prepared just like a little short list that I'm going to go over. It's facts for you guys. What is true about both strategies is they do allow a borrower to skip monthly payments for a set period of time. But all of this information that I'm giving today, it's going to be dependent upon who your lender is. And so depending on if you have Wells Fargo, Bank of America, and I'm just naming some of the big ones, Chase, it's going to be little bitty differences between each lender. Both strategies, they do allow you a temporary period during which you, the borrower, don't actually have to make payments. But the difference is between those two comes at the end of that period. Now, for a forbearance, that's usually 3 months, guys. And that's when that lender is allowing you to skip those payments. Let me give you an example. Let's just say you called your lender today. I think today is the 24th. And so you called your lender today. You told them that you were experiencing a disruption in your income and that you needed a forbearance. So what they're going to do, they're going to tell you that, okay, you do qualify for a 90-day period in which you can skip your payments. So let's just say you skip your payments for May, June, and July. And let's just say your monthly mortgage is $2,000. Well, July 1st, your lender, your servicer, your mortgage servicer will be looking for you to pay the back pay in $6,000 and what is due in July. So that's going to be a total of $8,000 that you will need to pay them July 1. That's with the forbearance. Now, with the deferment, what the lender will allow you to do is to skip those payments as well, but they will add that to the back of the loan. That's the distinct difference. But let me let you guys know something. I have been on Wells Fargo's website. I've been on Chase's website. I've been on B of A's website, and I've been on some of the little smaller mortgage servicers. You don't even see deferment on their site. Deferment is not even an option. They're not giving you an option for deferment. So if that's your choice, if I had to pick out of the two, I am going to choose deferment, but that is not even on their website. So it may not even be an option that they're giving you. I'm going to dig a little deeper. With the stimulus plan that the president approved back in March, you need to talk, Kim?
Yeah, let me share something with you, because this is going to tie into what I'd researched regarding banks and credit unions. And you just said something about Bank of America. They're one of course, you said that they're the three largest mortgage service providers in the U.S. are Bank of America, Wells Fargo, Bank of America, and Quicken Loans. I don't know if anybody knew that or not, but Bank of America says that they will provide you the forbearance and suspend or delay your payment, but it may also be completely erased. The payment missed may also be completely erased. But the key word there says may, and then and on Quicken Loans, they say that they will pause your payment for 3 months in forbearance status. And then after the crisis is over, they'll work with you to determine how best to move forward and get you back.
Oh no, girl. No. See, there is so much gray in between that. And that's what I need you guys to know. Guys, it is not black and white with this. I'm telling you, okay, just to continue so I can stay on track. Okay. The president in March, he approved part of the federal stimulus plan that he approved. It was the CARES Act. And the CARES Act was specifically put into this to give people mortgage and foreclosure relief. Now forget this, only on federally backed mortgage loans. So if you have a conventional loan, this does not apply to you. This applies to those that have FHA and VA loans. If you do not have that, there's nothing in the CARES Act for you if you don't have a federally backed loan. Let's make that clear. Okay. And so,
Lisa.
Yes.
Why don't you tell them what a federally backed loan is?
Right. The federally backed loan is when the government, right, it's a loan that the government is
FHA,
right,
VA,
it's a loan that the government
USDA.
actually is funding for you. So that is your FHA loans and your VA loans only.
Right.
Yeah. If you have when you purchased your home, if you have a conventional loan, this does not apply to you.
Wow.
Okay. And so you can only get this if your income has been interrupted or reduced as a result of the COVID-19. So let me just be clear. If you're still working from home and you're able to still make, earn money and do what you were doing when you were going into work, this does not apply for you guys. And later on, I'm going to tell you why. Now, under the CARES Act, they will allow you a forbearance period of 180 days. When you get to the end of that 180 days, if you're still in that same situation, they will approve it for another 180 days. Okay? And so but just keep in mind, if you're still in this situation, all of those payments that you're missing is going to be due when you get ready to start making payments. Okay? And under the CARES Act, they're not tacking on the additional fees or penalties. Now, they are going to charge the interest, but not the additional fees. Okay? And then under the CARES Act, the servicer cannot report your loan to the credit bureaus as delinquent. They're not supposed to do it. How do you get a forbearance? You just cannot assume that because you've lost your job or that you've received or that they've taken 50% away of your income. I have a client now who we were putting their home on the market, but he's in oil and gas, and they've reduced his salary by 30% until August. So guess what? He's not selling right now. But
he even has a job, considering
What'd you
oil
say,
was
Kim?
at zero. I said, I'm surprised he even has a job, because oil barrels were at $0 per barrel at the beginning of this week. My head almost spent like
right,
when I saw that. Sorry, go ahead, Lisa. I interrupted.
right. So how do you get a forbearance? Don't just assume that the lender or your mortgage servicer knows your situation. Don't just assume that. Okay, you have to pick up the phone and you have to give them a call and let them know. Okay, once you let them know, they're going to send you some paperwork for you to fill out and all of that good stuff. And if I were you, I would continue every month to call your mortgage servicer, making sure that you and the mortgage servicer are on the same plan and that you guys are, the understanding is the same. Okay, and so once you do that, once you call and get everything set up, then you're good to go. Now, what I've just given you guys, it's the facts. Now I'm going to give you Lisa's opinion on this thing. Okay, now, if you've lost a job, if you had a reduction in income, great. I'm praying with you that, you can come out of this, but what you don't understand is that because our entire country is being impacted right now, the mortgage servicer says that they will not put a delinquent mark on your credit, but it doesn't mean that it won't happen, guys. Do you know how many of us are needing mortgage relief right now? So if they do by mistake put a mortgage, put delinquent on your credit, you don't know if it's going to take 30 days to fix that or
Right.
12 months.
Right.
You don't know. And in between that time, you could probably be wanting to purchase another home or do something different. That is going to stop you or hold you up from moving on with your next step. Okay, so for those of us that have the mentality, oh, I can save some money right now. No, I don't think that is for you. I truly don't. I mean, if these are for people that are in desperate need of this.
So Lisa,
Kim or Marla or Tana, do you guys want to have any input on anything that I've said?
Yes, absolutely. I'm so
like
glad that you shared that information, first of all, Lisa, but also I'm glad that you said what you said at the end. It is for people that are in desperate need of it, because people just, they hear something on the news and, it's not even the full detail. And then they just run off thinking, oh, that, this is what I can do. And although it's available, does not mean that you should try to take advantage of it. That if you can pay, please pay. Please pay. That's mortgage as well as those that are paying rent. Go ahead and pay. It does not give you the carte blanche to say, hey, I'm just not gonna do it. It's going to affect you. There's not, consequences are going to come with it, is what I'm trying to say.
Right. And so
That's it.
that leads me into the portion that I've kind of dove into for this show, which was, how banks and credit unions are handling these forbearances and deferments. And so what I did on like Wednesday of this week is I downloaded this information piece from Forbes online. It was a publication from Forbes online, and they were talking about suspending your mortgage and how to keep your home during the COVID-19 crisis. And so the information I shared earlier, Lisa, about Bank of America, just want to share with you guys this little snippet that and I don't have it to put on the screen, but I'll read it to you and then I'll put a link on the Red Door Conversations Facebook page so everybody can access it afterwards. But a lot of what you said, Lisa, is exactly what the banks are saying. One, don't call your lender first. Engage your lender first, because it's not an automatic that you get a deferment or a forbearance. And so if you call them after you're already late and you're applying for this, then it may not even be available for you, is the one thing that I see. And there's a difference between conventional mortgages and the federally backed mortgages that you mentioned earlier, Lisa, the FHA, VA, they're just regulated differently, right? So a lot of the banks, credit unions, and the federally backed loans are regulated differently. And Sherrod, I'm going to chime in here because what I did on this was I put a lot of question marks, but I needed some expert opinion on it. Yeah. Because some of this didn't jive when I was reading it. So under Wells Fargo, they say they have a variety of repayment options to suspend your payment, or including loan modification.
Okay.
So to me, when I hear loan modification, I don't necessarily think that is a forbearance or a deferment. That is something completely, totally different, right? That's modifying the loan terms. And well, let me ask you, what does that mean even? If loan modification is an option on a mortgage?
So what that means is they're gonna rework the loan, right? And
Okay.
so you guys have to understand, and everybody made some great points. The thing about it is that the banks, credit unions, and all these different lenders are still going to make money during this time. That's why none of them forgoes the interest. You've never heard not one party say they're going to help you out. If you freeze my interest along with my payment, you're really helping me out. But I think one of the young ladies, she said that if you had a $2,000 a month mortgage and I get a forbearance loan, if I don't have $2,000 now, in 4 months, how am I going to have $8,000?
Right.
And so that's but they keep the interest going the whole entire time. And that's not just with a mortgage loans, that's with all of your loans, your car loan. Everybody's trying to help out, but you got to understand the banks, they're going to make money at this time as well. So they're going to rework your loan, Kim, to answer your question. They're going to rework the loan, try to see if they can lower your payments, right? So with us as a credit union, we do a 60-day forbearance, right? With our car loans, right? Now that's not reworking the loan. If we rework the loan, we're trying to lower your payments in some type of way, shape, form, or fashion because you can't pay anymore. So instead of getting a house or repossessing your car, we're trying to rework the loan where probably give you a longer term and a cheaper interest rate or a cheaper monthly payment. And that's what a loan modification is. We probably give you a longer term so we can lower the monthly payment, and that kind of helps you out if you're on unemployment or some things of that nature. So the bank credit union won't take a total hit because we don't like to own houses and we don't like to take on cars. Just being honest.
Okay. That makes sense. That makes sense.
Credit union we like money, we like payments. That's why they'll modify things of that nature. But y'all gave some great information because the forbearance loans, that's a tough decision if you're not working. That's really tough.
Yeah, because at the end of the day, in 3 months, like you said, if I didn't have my $2,000 to pay my original payment, so in 3 months, am I going to have $6,000 plus my $2,000 due at the time that this forbearance expires? So it's kind of putting people in a loss situation. There's no win for them.
Well, you better have a rich uncle. You better have a rich uncle or a rich aunt you could get $6,000 to $8,000 from. That's all I'm saying.
Yeah.
But it's just a tough time for everybody, and so we try to.
What's that, Lisa?
I'm saying, Kim, you are exactly correct. It's a loss situation.
Yes, it is.
It's a loss situation. I say it's a loss situation.
Okay. So Wells Fargo is saying that they'll suspend longer payments. We're in the bank and credit union section of this podcast now. So Wells Fargo is saying that they'll suspend your loan for longer payments, which is what Sharoy said. And so that's a form of deferment, probably a mesh of deferment and loan modification, because when they say we'll determine how to, like Quicken Loans, that we'll determine how to best get you back on track, you know, that's very vague. That doesn't tell me what I can expect moving forward. It does give me some reprieve. So I think for a lot of people who are at the point where they really absolutely need a reprieve, they have absolutely nothing left, then consider those items. I mean, you know, the forbearance, the deferment, or loan modification. They said they won't, all three of the big banks, mortgage lenders said they won't be applying any late charges or past due payments. But to Lisa's point, once that late payment is on your credit, I want people to tell me how hard it was. If you've ever gotten a late payment on accident or on purpose, how hard was it to get it off your credit? And then once that happens, your score is impacted. And now to Lisa's point, if you had anything planned in December, you were gonna buy a home for your family or anything, now your score is at a point that you can't even buy. Not to mention, if you were trying to get an FHA loan, you could have got that loan last month with a 580 credit score. Now you've got to have a 640 score or higher to get a federally backed FHA loan. So, you know, it's not getting easier for you if you've got these type of things on your credit. You know, so it makes sense to have the conversation with your lender directly. I would tell people right now, even this on this podcast, don't use us as your point of contact for your independent lender. Call your credit union, call your bank, call your car loan people. Bank of America is suspending car repossessions though. I'll tell you that. That's what they said. That was just the sentence. We're suspending car repossessions during this time. That does not mean don't pay your car note. That means call Bank of America and set up a payment plan of some type to make sure that you know where you're going to be in the next 90 days. So guys, the big loan that everybody wants to talk about, the big one. Anybody guess?
Student loans. Student loans. I think we all have them. You know, one thing I didn't pull. What was that?
What'd you say?
I didn't hear you. I said one thing I didn't pull was how many people actually have student loans, the percentage.
I think it's
Does
like
anyone know that information?
I think it's like 75% of Americans have student loans.
Whoa. Wow.
So, yeah, it's a really high percentage. It's extremely, yeah.
That's crazy. So I don't know if you guys heard, but the student loans, the federal student loan program has been suspended through September 30th. Okay, so.
But that means you still have to call your lender and say, hey.
So yes, I was gonna go ahead and say that, but I wouldn't, even though it's been suspended through September 30th, don't just, you know, don't just blow it off. Make sure you call the servicer, your student loan servicer, just to make sure that you're plugged in and that you won't still be penalized, you know, for not making a payment. That would definitely be my advice to anyone that has student loans out there. You know, you want to make sure that, can you guys hear me?
You're good, Tana. I think we all muted our mics so that there's no feedback.
Okay, because I was getting hold on. I'm sorry, guys. I'm having to sit on the floor because my phone was going out on me and I don't have a long enough cord. Let me put my earplugs in. If you guys have anything you want to say, go ahead and say it.
On the student loans, it's amazing, 75%. So we have 300+ million people in the United States. 75% have student loans.
They said in 2018, 69% of those graduates had student loans. So America's debt in student loan is 1.64 trillion in student loan debt. 44 million Americans have student loans.
That's crazy.
44 million Americans don't have viable jobs to support the student loans that we have taken out.
So what I want to share with people too is that this is only for federal student loans. This does not apply to any private loans. Okay, so if you have private loans out there, you're still responsible for making those payments.
Do they have any type of forbearance, deferment, or modification for private loans, Tina?
Not that I know of. I'm gonna say no at this moment.
Sharoy?
We don't do, so the parents can take out what you call a personal loan here to credit union, right? We do personal loans up to 30,000. So parents can take those loans out. And if there's a balance with a credit union on the personal loan, all credit unions are giving forbearance, 60 days. We're giving 60 days.
All
we're
credit unions?
Majority of credit unions are giving 60 days.
Okay,
Mhm.
I didn't know that.
Yeah.
So during this time, no interest will accrue on your federal student loans. Okay, so that's only during this period. The interest rate is going to be 0%. Okay, but again, just remember that this is only for federal and that it's all the way through September 30th. That there's not going to be any payments and it's 0% interest.
That's actually really good for student loan debt, considering so much of people's debt is student loan. That's good.
Yeah, 75%. That I didn't realize it was that.
So I'm curious, if someone's trying to buy a house during this time, like during the next 60 days, is their loan put in a pause status? Like, so for instance, it's not calculated into their debt to income? Is that?
So we don't calculate student debt here at +4. We don't.
Wow.
We don't calculate student debt, especially if the loan is in. I think if the student loans are in, I forget what state. I'm one of the blessed ones. I didn't have student loans. I played college football, but I guess if the loan's in forbearance or whatever, we don't calculate the student loans in our debt to income. But
Really?
all credit unions are different, though. Yeah,
Wow.
all credit unions are different.
I'm gonna have to bring some clients to.
I made that note.
Definitely. And I need to bring some of my clients on over. Now, one thing that I did not mention is that the student loan debt collection, it has been halted as well. And what this basically means is that the wages, tax refunds, and Social Security benefits will not be garnished during this period. So that's another good thing. Just make sure you contact the service provider. Don't let it go.
Okay, we have some questions, guys. We have some questions, guys. Okay. The first question is from Bree Johnson. She wants you to give the name of your company again that doesn't calculate student debt. Give us the name of your company again.
So we don't calculate student debt if the student loans are in forbearance or if they're not paying them yet. I think so, you can put off the student loans. I don't really know the terminology for that because I don't have student loans. My company is +4 Credit Union, PLUS, the number 4 Credit Union, +4 Credit Union.
Okay, thank you so much.
Mm-hmm.
Okay, now Bree had another question too. She asked, at the end of forbearance or deferment, are the missed payments due in one lump sum or will they be broken up over a certain period of time? I can answer that for you, Bree. A forbearance, those payments are due at the end of the set period that the bank has approved for you. So if they have approved, usually it's 3 months. And if they've approved for you a forbearance for 3 months, then at the end of that 3 months, then those 3 missed payments and that next payment is due as well. So if your monthly mortgage is $1,000, that means that you are going to pay $3,000 for those 3 missed payments, as well as what's due at the beginning of that following month. So that's going to be $4,000 that you are due. If you don't have that, then what they are going to do is they're going to recommend you for the loan modification program. Okay, now a deferment means that those payments will be added to the end of your loan. But when I spoke earlier, all of the mortgage servicing companies' websites that I've gone to, deferment is not even an option. Now, it may be something that they do offer, but it's not on their website. So that's something specifically that you have to ask them. But a deferment is when those payments are added to the end of your loan. Now, keep in mind, it's the payments, it's the interest, it's the fees. If you don't have a federally backed loan, if you have a FHA loan or VA loan, then those fees will not be added. I hope that answers your questions. Let me see if that.
Before we end, I have a number here that I want to go ahead and say out for people that don't know who their loan servicer is. They can call the Federal Student Aid Information Center to find out who their loan servicer is, guys. Okay, and that number is 800-433-3243. I'll go ahead and repeat it. It's 800-433-3243. And again, that number is to find out who your loan servicer is. You'll be calling the Federal Student Aid Information Center.
We hope that this information, that you guys got a lot out of this, because, we do understand that people are experiencing different things. The main thing, just to, blanketly cover everything, that I would say, is that you talk to professionals. We thank you so much for having Plus for Credit Union with us here. And he totally agreed that if you're having a situation with the lender, to have that conversation with the lender. Is that correct?
Yes,
Yes.
please do.
All right. And
Yes.
so we want you guys to be safe until we see you next time. And if you have questions, please feel free to reach out to us. Check us out on YouTube or on Instagram or on our Facebook page, and we'll answer your questions. Thank you so much and take care.
Thanks, everybody.
Bye-bye.
Stay well. Stay well.
Bye-bye.